Welcome back to Switzer on Australia's Business Channel. It's been 4 days of gains on the Aussie share market and support for a Christmas rally is continuing to swell. But what are the charts telling us about where things are headed and how the predictions right now and then in the past are shaping up? To find out where what we think is going to happen, we're joined by Charters Extraordinaire Lance Lai, Chief Investment Advisor to Ace Capital Trust, a fund for Japanese investors. How are you, mate?
How are you, Peter?
I'm very good.
Thank you.
What about the current market rally? How do you see that, Lance, at the moment?
In equities or in equities? In equities.
We'll go to gold later. I know you're here to talk about gold, but you watch the market all the time.
That's right.
You were rather bearish. You got the collapse right, which a lot of people didn't get right. You've still been quite cautious across the rally. Is this rally starting to make you a little bit more optimistic than you were, say, 3 months ago, or are you still a bit worried?
Look, I'm optimistic. Today, Rio had a nice run up on the local scene,
yep.
And that to me was on the back of some good China output numbers. Rio, being the large cap that it is a good indicator of where we might be headed. And that stock today broke out, made a short-term high, closed at $68, somewhere in the 50s, and it looks like it can run a little bit further. Now, on the flip side of that coin is that China has, or Shanghai has hit some major resistance, and despite the good numbers coming out,
very good numbers, but industrial production up 16-something%, retail up 16%. These are really Chinese numbers, aren't they, Lance?
Well, yeah, good numbers are important, Peter.
Yes, sir.
The market was off when I left the office, and it's because it hit some major resistance levels. Now, the gold chart reflects that there's a shift going on in relative asset values in the world.
Now, we've got a gold chart with us, so you keep talking and I'll get it up for us in a second.
Okay.
Okay, well, there it is there, Lance.
Oh, wonderful.
Okay. So what... To a normal person, as I always say, this could look like double Dutch or double Chinese. But what are we looking at here, mate?
Well, basically, we've got a chart that goes back to, on the far left there, you can see that's September of 07, which is basically when the market more or less peaked. And
700, it was under $700 the gold price.
Correct.
Yeah, okay, right.
And then what we saw is that it spiked up in March of 08 to a peak of 1,030.
Fear factor driving that with the stock market dropping.
That's right.
Yeah, right.
And then what happened? It closed at the day at 1,020, but it, intraday hit 1,030. Then it went into an 18-month correction, well, consolidation, I should say, and the consolidation lasted until the 7th of September 09, where I've got a little indicator mark there, where it breaks out over 1,000. Now, the line that goes across the top there...
Yeah, that long white line.
Correct.
Yeah, right.
That actually marked a strong level of resistance. And when it broke through, you can't exactly see it on there, but it's 988, Peter.
Okay, so it's below 1,000. We can see that, yep. When
it breaks through there, you can see it start moving up quite aggressively. And I've got a target there of 1,175. Yeah. And then there's another target where I put target 2 is 1,320. So
what you're saying is that these squiggly lines that mean nothing to normal people but to people like you, you're seeing these targets are very real possibilities. Like we're around, what, 1,100 or something today, aren't we?
Correct, 1,106.
Yeah, something like that. Now you've got gold heading up to 1,175
as basically a first major level of resistance, and then followed by 1,322, which is still 20% away.
Now, Lance, this is driven by your technical analysis. The charts are suggesting these are a distinct possibility.
Correct.
Do you then go off and check the fundamentals out and say, well, am I getting support from this from the real world, like in my virtual technical world that says this, but are the fundamentals actually supporting you, do you think?
Well, obviously the US printing money hand over fist because gold there is denominated in US dollar.
Yeah, good point.
So,
so as it goes down, in a sense, as the US dollar goes down in value compared to other currencies, the gold price is going up because you want more dollars to actually buy gold.
Exactly, and and on the fundamental side, what it shows is the relative shift of real asset values, real purchasing power across different nations.
And you think the Chinese and the Indians, who love gold anyway for ceremonial purposes, they also trust gold more than anything else as well, don't they? Are they shifting more out of US dollars and into gold in the interim period on the belief that one day the greenback might make a comeback, but it's more likely to fall?
Exactly, exactly. I mean, you know, the Indian government, we saw what happened last week. So, yes, I think those in the fundamental world, there's all this other information that's backing it up as well.
Yeah. And so we can't expect then, unless something comes from left field, that these slopes or these lines and the steepness of these lines that suggest these targets are possible, they look really on the cards at this stage.
You know, what we've learnt over the past, I suppose, 18 months is that government intervention often is the X factor. You know, I had lower targets initially, and the government came in, put a base under that. So what we'd be looking for is, if nothing else changes much, then I would expect those targets to be met, and met in reasonably fast time.
So, okay, we've got another chart here, so let's bring the next one up. But while we're waiting for it, here it is now. This one, tell us about this one, Lance.
Well, what this is rather, is it shows how perfect, if you like, the rally has been. It's been textbook bull run, and it kind of reminds me almost of the NASDAQ run 2 years before it peaked in 2000, you know, at the very beginning, where there was no more resistance. And as you can see there, the first line, you've got 988. This is a blow-up of my the first chart. And it breaks above, you can see it swoops down and it breaks above the 988 level, goes to 1,026 basically pretty quickly. Drops back down to test the 988 again. Brilliant time for people to buy back in. And then it says, I'm going there once and I'm off. It goes to 1,066. Didn't muck around.
No.
It's done that again. It did that again, and in fact, I think we were together in Melbourne when it tested that 926.
I was concentrating on something else, but you were watching gold every minute of the day. All right, so, okay, that's one. Let's go to the next chart, because the next chart's an interesting one as well, isn't it? And this